In early 2025, on a random Tuesday afternoon, a buddy of mine who trades commodities full-time sends me a screenshot. It's the silver price chart. And he just writes one word. Dude, I look at the chart. Silver's up 47% year to date. It just became the third best performing major asset in the world, ahead of the S&P, ahead of gold for most of the year, ahead of oil, ahead of almost everything except Bitcoin and Nvidia. And I'm thinking, okay, that's interesting. Silver doesn't usually do this. Silver sits there. Silver does nothing for years, sometimes decades. And then I see another message from him. China just stopped exporting it. And that's when I realized this isn't a story about a shiny metal going up in price. This is a story about leverage. This is a story about how you quietly take control of something the entire world needs, something they can't function without, and then you flip the switch. And what China just did with silver is one of the smartest geopolitical plays I've seen in years. Because they didn't ban it. They didn't make a big announcement. They just reclassified it. And that one boring bureaucratic move might have just broken the entire global silver market. So I'm going to walk you through exactly what happened, why it matters even if you don't own a single ounce of silver, and what this tells us about where money and power are actually moving in 2026. Here's the thing. Most people think the price of silver is set by supply and demand, right? Mines produce it, industries buy it, the price adjusts, clean and simple. But that's not how it actually works. The price of silver, the number you see on your brokerage app or on Bloomberg, that price is set by something called price discovery. And price discovery happens in markets. And there are two markets that matter. The first is COMEX, which is the big futures exchange in the United States. The second is the Shanghai Futures Exchange in China. Now, COMEX is where most of the world's silver is theoretically traded. I say theoretically because here's the weird part. Inside COMEX-approved vaults, there's only about 120 to 130 million ounces of something called registered silver. Registered means it's available for delivery if someone actually wants physical metal. But global demand for silver is about 1.1 to 1.2 billion ounces per year. So the registered silver in COMEX vaults represents less than 10% of annual global demand. Let that sink in. If every single person who bought a silver futures contract on COMEX actually wanted delivery, there wouldn't be nearly enough metal to go around. But this works. It works because almost nobody takes delivery. Most traders just roll their contracts forward or settle in cash. They're not buying silver. They're buying exposure to the price of silver. It's paper silver. And as long as everyone's playing that game, the system hums along just fine. But what happens when people stop playing that game? What happens when they start wanting the actual metal? That's where Shanghai comes in. Because unlike COMEX, Shanghai silver prices reflect actual physical delivery. You're not buying a contract that might someday maybe become silver if you really push for it. You're buying silver that will show up at a warehouse in China. And because of that, Shanghai prices are almost always higher than COMEX prices. They trade at a premium. Usually that premium is tiny, like 50 cents, maybe $1 an ounce. Arbitrage traders smooth it out. They buy where it's cheap, sell where it's expensive, move the metal, prices converge. That's how markets are supposed to work. But on December 24th, 2025, something very unusual happened. Physical silver in Shanghai closed at $78 an ounce. At the exact same time, COMEX silver, the paper stuff, closed at $72 an ounce. That's a $6 gap, and it stayed there for hours. Now, I know $6 doesn't sound like much, but in the silver market, that's enormous. That gap is basically the market screaming that physical silver is not moving the way it's supposed to. Arbitrage isn't working. And when arbitrage stops working, it means one thing. The physical metal is getting harder to source. The supply chain is breaking. And here's the kicker. That breakdown didn't happen by accident. Let me tell you a story. Back in the 1500s, if you wanted to do business with China, you paid in silver. Not gold, silver. For 300 years, China ran on silver. Their taxes were paid in silver. Their wages were denominated in silver. Trade balances were settled in silver by weight. It was their money. It stabilized their economy. It worked. But then in 1934, the United States passed something called the Silver Purchase Act. The U.S. government started buying up huge amounts of silver, and the price shot up. Now, if you're an American, that sounds fine. But if you're China and your entire monetary system is based on silver, that's a disaster. Because as the price of silver went up, silver started leaving China. It flowed out to wherever the price was higher. And when your money leaves your country, your economy collapses, prices started falling, deflation set in. And deflation sounds good at first. Oh, things are getting cheaper. But here's the problem. When people expect prices to keep falling, they stop spending. They stop investing. They wait. And if everyone waits, the economy eats itself. Businesses shut down, unemployment spikes, the whole thing spirals. So in 1935, China did the only thing it could. It abandoned the silver standard and moved to paper currency. And here's the lesson they learned. If your economy depends on a material you don't control, other countries can weaponize it against you. China didn't forget that lesson, and what they're doing right now with silver is that lesson playing out in reverse. On January 1st, 2026, China officially reclassified silver under something called dual-use export control rules. What does that mean? It means silver is no longer just a commodity. It's now considered a strategic material that has both civilian and military applications. And once something is labeled strategic, exports aren't automatic anymore. They require government approval. Now, if China had just banned silver exports, that would have caused an international incident. The U.S. would have freaked out. Europe would have complained. Everyone would have retaliated. But by relabeling it and adding a licensing process, China gets to say, we're not banning anything. We're just regulating something important. And on paper, that sounds reasonable. But in practice, the rules are written so narrowly that almost no one qualifies for a license. And even if you do qualify, approval is entirely at the discretion of the Chinese government. It's a gatekeeping mechanism disguised as a safety regulation. And here's why that matters. China sits in the middle of the global silver supply chain. Most silver isn't mined on its own. It's a byproduct. When you mine for copper or lead or zinc, you find silver mixed in with the ore. And that silver has to be separated and refined before it's usable. And a huge chunk of that refining, maybe 70 to 80% globally, happens in China. So even if the silver comes out of the ground in Mexico or Peru or Australia, there's a very good chance it still passes through Chinese facilities before it becomes a usable product. And starting January 1st, China gets to decide if that refined silver leaves the country or not. Now, this isn't even the first time China's done this. Over the last decade, they did the exact same thing with rare earth elements. If you don't know what those are, they're a group of 17 metals that are absolutely critical for modern technology. Electric motors, wind turbines, guided missiles, smartphones, all of it needs rare earths. And China controls about 80 to 90% of the global refining capacity for them. In the early 2010s, China started restricting exports. They added quotas. They required licenses. Prices went through the roof. And Western governments panicked. The U.S., Europe, Japan, they all scrambled to build their own rare earth supply chains. And you know how long that took? Over a decade. And even now, they're only partially independent. That's how hard it is to replace Chinese infrastructure once it's already embedded in your supply chain. So what we're seeing with silver right now is a rerun of the rare earth playbook. But there's one big difference. Rare earths are specialty materials. Most people don't even know what they are. Silver, on the other hand, is everywhere. It's in solar panels, it's in electric vehicles, it's in every smartphone, every laptop, every data center. It's one of the best electrical conductors on the planet. And unlike gold, which is mostly a store of value, silver is a material you have to use. And here's the key thing. When silver gets more expensive, industries don't stop buying it. They can't, They don't have a substitute that works as well, so they just pay the higher price and pass the cost on to consumers. There's this theory that's been floating around in commodities markets for years. The idea is that for the last few decades, the price of silver and gold has been artificially suppressed, not by some shadowy conspiracy, but by the very structure of the futures markets. Because if you're a government or a central bank and you want to keep inflation expectations low, one way to do that is to keep commodity prices stable. And the easiest way to keep prices stable is to make sure there's always plenty of paper contracts available to satisfy demand, even if there's not enough physical metal to back them up. It's like printing money, but for commodities. You create the illusion of supply. Now, I'm not saying that's definitely what happened, but I am saying that when you look at the ratio of paper silver traded on COMEX versus actual registered silver available for delivery, the numbers don't make sense, unless most of that trading is never intended to result in physical metal changing hands. It's a financial abstraction, and it works until it doesn't. Here's where it gets really interesting. The demand for silver is about to explode, not because people suddenly decided they like shiny things, but because of what the world is building. Artificial intelligence, robotics, automation, the entire energy transition. All of it runs on silver. Every new data center that gets built to train AI models needs silver. Every electric vehicle that rolls off the assembly line needs silver. Every solar panel installed to hit net zero targets needs silver. The forecasts show demand growing by double digits over the next decade. And remember, 70 to 80% of silver production is a byproduct of mining other metals. That means even if the price of silver doubles, production doesn't automatically increase unless we're also mining a lot more copper and zinc and lead. Economists call this inelastic supply. It's rigid. It doesn't respond quickly to price signals. Let me give you an analogy. If the price of coffee doubled tomorrow, a bunch of people would just drink less coffee. That's elastic demand. It adjusts, but if the price of insulin doubled, diabetics would still buy it. They don't have a choice. That's inelastic. Silver is like insulin for modern industry. You need it. You can't wait. And China just put itself in control of the supply. Now, let me paint you a scenario. Let's say you're a mid-size solar panel manufacturer in Germany. You've got contracts to deliver 10,000 panels a month. Each panel needs about 20 grams of silver. That's 200 kilograms a month, or about 6,400 ounces. At $70 an ounce, that's roughly $450,000 in silver costs per month. Now, China announces export restrictions. Suddenly, the silver you used to source from Chinese refiners requires a license that takes 6 months to approve, if it even gets approved. You can't wait 6 months. You've got contracts, so you go to the spot market. But the spot market's getting tight because everyone else is doing the same thing. The price jumps to $90 an ounce. Now, your monthly silver cost is $575,000. That's a 28% increase in your raw material cost. And you have no choice but to pay it. That's the leverage China just created. And it's not just solar. It's the entire electronics industry, the entire defense sector, missiles, satellites, radar systems, all of it uses silver. If you're the US, Department of Defense, and your supplier says, sorry, we can't get silver because it's stuck in China, you've got a national security problem, not just an economic one. Here's a fun historical parallel. In the late 70s, there were these two brothers, the Hunt brothers, and they tried to corner the silver market. They bought up massive amounts of physical silver and futures contracts, trying to control the price. And it worked for a while. Silver went from around $6 an ounce in 1979 to over $50 an ounce by January 1980. That's more than an 8 to 100% increase in about a year. Then the exchanges changed the rules, the bubble popped, and the Hunts went bankrupt. But here's the thing. The Hunt brothers were private individuals trying to manipulate a market. China is a sovereign nation controlling a supply chain. They're not trying to manipulate the price. They're trying to control access. And that's way more powerful. Because once you control access, price becomes irrelevant. You can charge whatever you want, or more importantly, you can decide who gets it and who doesn't. Let me tell you another quick story. A friend of mine runs a small tech company. They make sensors for industrial equipment. A few months ago, he put in an order for silver from his usual supplier. The lead time used to be 2 weeks. This time, the supplier says 12 weeks, maybe 16. My friend asks why. The supplier just says, China. My friend doesn't follow commodities markets. He doesn't watch the news about export controls. He just knows he can't get the silver he needs to build his product. So he has two choices. He can wait and delay his customer orders, or he can pay a premium to get silver from a different, more expensive source. Either way, his costs go up. And this is playing out across thousands of companies right now. It's not making headlines, but it's happening. The supply chain is quietly seizing up. Now you might be thinking, okay, but can't we just mine more silver? And the answer is sort of, but not quickly. Because remember, most silver is a byproduct. If you want more silver, you need to mine more of the primary metals. And mining projects take years to develop. You need permits, environmental studies, financing, infrastructure. Even if a mining company decided today to ramp up production, it would be late 2027 or 2028 before that new supply hit the market. And by then, the shortage could be severe. There's another angle here that I think is underappreciated. Gold and silver have always had this weird relationship. For most of human history, they were both money. But in the modern era, gold became the serious one. It's what central banks hold. It's what backs currencies, at least symbolically. Silver became the industrial metal. It lost its monetary status. But here's what's interesting. China's been buying gold like crazy for the last decade. They've built the Shanghai Gold Exchange. They've been expanding what people call the Gold Corridor, which is basically a network of gold storage and trading infrastructure across Asia and parts of Africa and the Middle East. And they've been very public about it. They're telling the world, if you want an alternative to the US dollar system, we've got one. It's backed by gold. That's the monetary play. That's about trust. That's about creating a reserve currency that doesn't depend on the United States. But silver is the industrial play. It's not about trust. It's about control. It's about making sure that if the world wants to build anything, solar panels, electric cars, data centers, weapon systems, they have to come to China. Or at least they have to play by China's rules. And when you combine those two strategies, the gold strategy and the silver strategy, you get a pretty clear picture. China is building a parallel economic system, one where they control the money and they control the materials. And if you're a country that wants to develop, you've got two choices. You can stay in the US-led system, where the dollar is king, but the US can sanction you or cut you off whenever it wants. Or you can join the China-led system, where gold is the anchor and China controls the resources. It's not about ideology, it's about leverage. Now, I want to be very clear about something. This is not a prediction that silver is going to $1,000 an ounce, or that you should go all in on silver futures. I have no idea where the price is going next week or next year. Nobody does. What I do know is that silver has this very specific pattern. It does nothing for years, sometimes a decade, and then it moves extremely fast. In the late 60s and 70s, it doubled multiple times. In 1979 into 1980, it went from around $6 to over $50 in just over a year. Then it crashed. Then it did nothing for 20 years. Then in the mid-2000s, it ran from around $5 to nearly $50 again by 2011. Then it crashed again. It's a boom-bust cycle driven by supply shocks and speculative mania. And the problem with trying to time it is that you never know which phase you're in until it's over. Are we at the beginning of a massive run because of a genuine supply crisis? Or are we near the top of a speculative spike that's about to roll over? I genuinely don't know. And neither does anyone making videos about it on YouTube, including me. What I do know is that the fundamentals have changed. China's export restrictions are real. The supply chain is tightening. Demand is increasing. And the gap between paper prices and physical prices is widening. Those are facts. What happens next is speculation. And speculation is where people make fortunes and lose fortunes. Because when silver runs, it tends to overshoot. The price goes way higher than the fundamentals justify because traders and investors pile in. And then when the momentum breaks, it crashes just as hard, and the people who bought at the top get wiped out. So, if you're thinking about buying silver, or if you already own some, just understand what you're holding. You're not holding a stable store of value like a treasury bond. You're holding a volatile industrial commodity that's also a geopolitical chess piece, and the price can swing violently based on things that have nothing to do with supply and demand. A headline about China, a rumor about export quotas, a change in futures market margin requirements. Any of that can move the price 10 or 20% in a day. Now, here's the part that I think is actually more interesting than the price of silver itself. When speculative money flows into silver and it runs up and then it eventually corrects, that money doesn't just disappear. It goes somewhere else. It looks for the next opportunity, the next thing that hasn't run yet. Sometimes that's stocks. Sometimes it's energy. Sometimes it's emerging markets. In the last few years, a lot of that money has gone into Bitcoin and other hard assets. We've had the run in gold. We've had the run in silver. We've had the run in tech stocks, especially AI-related names. And at some point, that momentum is going to shift. The money is going to rotate. And the question is, where does it go next? My guess, and this is purely a guess, is that we're going to see more money move into real assets that are hard to manipulate and hard to control. Things like commodities, real estate in specific markets, maybe even certain equities that have pricing power in a world where supply chains are fragmenting. Because that's the real story here. The world is fragmenting. We're moving away from the globalized, just in time, everything's available everywhere model that we had for the last 30 years. And we're moving into a world where access matters more than price, where the ability to secure supply is more valuable than the ability to get a good deal. And in that world, the countries and companies that control the choke points have all the leverage. China learned this lesson the hard way in the 1930s, when their silver-based economy got destroyed by US policy. They learned it again in the 1990s and 2000s, when they realized that being the world's factory didn't give them strategic power unless they also controlled the inputs. So they quietly took control of rare earths. They built domestic refining capacity for almost everything. They secured supply chains all the way back to the mines in Africa and South America. And now they're doing the same thing with silver. It's not loud, it's not flashy, it's just methodical, long-term, strategic thinking. And the West is only now starting to wake up to what's happening. Here's the uncomfortable truth. The United States and Europe have spent the last 20 years financializing everything. We don't make things anymore. We make spreadsheets. We make software. We make financial products. And that's fine when the world is stable and supply chains are open. But when the world gets unstable and supply chains close, the countries that actually make things and control resources have the power. And right now, that's China. They refine the silver. They process the rare earths. They make the solar panels. They build the batteries. And if you want to transition to green energy or build AI infrastructure or manufacture electronics, you need their stuff. That's leverage. And leverage is the most important currency in a world that's fragmenting. It's more important than military power. It's more important than reserve currency status. Because you can have the biggest military in the world, but if you can't build missiles because you don't have access to silver or rare earths, your military advantage erodes. You can have the world's reserve currency, but if other countries can trade in a different system backed by gold and resources, your currency's dominance erodes. Power is shifting, and it's shifting to the countries that control the physical stuff. So what does this mean for you? Practically, 3 things. First, if you're invested in markets, understand that we're entering a period where resource access is going to drive a lot of price action. That means commodities are probably going to be more volatile and more important than they've been in a long time. It doesn't mean you should go all in on silver or gold or oil. It just means you should have some exposure to real assets, because the financialized assets, stocks and bonds, might struggle in a world where supply shocks become the norm. Second, if you run a business that depends on physical materials, and honestly, most businesses do in some way, you need to think about supply chain security, not just cost. The cheapest supplier might not be the most reliable supplier. And in a world where export controls and geopolitical tensions are rising, reliability is worth paying for. Lock in long-term contracts. Diversify your sources. Build some inventory buffer. It costs more upfront, but it's insurance against getting caught in a supply squeeze. Third, and this is the big one, pay attention to the second order effects. When China restricts silver, that's the first order effect. The second order effect is that manufacturers start looking for substitutes or alternative suppliers, which drives up the price of other materials. The third order effect is that the higher costs get passed on to consumers, which drives inflation, which forces central banks to react, which affects interest rates, which affects everything. The whole system is interconnected, and a disruption in one commodity market can ripple through the entire economy. So don't just look at silver. Look at what silver's move tells you about where the world is heading. It's a signal. And the signal is that the era of cheap, abundant, freely traded commodities is over. We're moving into an era of expensive, scarce, strategically controlled resources. And that changes everything. China didn't just break the silver market. They broke the assumption that markets are neutral. They're not. Markets are tools. And right now, China's using the silver market as a tool to build leverage. And if you understand that, you're ahead of 99% of people who just see a price chart and think it's about supply and demand. It's not. It's about power. And power, in 2026, is measured in control over the things the world can't live without.